Look, it's a very antiquated method of trading what is the most modern of products. OTC and FX, spot foreign exchange, certainly is an OTC product. So the tails of it end up on centralized exchanges. But what you have is major players in foreign exchange who have inventory. So they can afford to trade from their inventory. And if you like, lessen the market impact by leaking those trades and that flow into the market at a time of their choosing. The crypto market, OTC, there's not many people who have the inventory to trade out of their own book. I think it's a bit of a myth that these $100 million trades flying around the place. If they do happen, they end up being externalized on exchanges like LMAX Digital. So in fact, Max would be the benefactor of some OTC deal that's happened. And traditionally, people have tried to treat it as an RFQ or RFS, and they provide a quote for a certain period of time in larger size. I happen to believe that algo execution and access to central limit order books, you will always end up with a lower cost of trading. But I'm an exchange evangelist, so I guess I have to believe that.
The flow that is hitting the exchanges is over time going to get more aggressive and more quote-unquote toxic, because more sophisticated people with better algos are just going to go to the exchanges. And at the same time, the people that have a more benign user base, like a retail user base, just small investors that don't move the market, they're going to find that the pricing that they get on the exchanges is not as good as what they can get OTC. That's exactly what has played out in FX and other markets.
I disagree. Most of the flow you see today comes from exactly there, right? And you can't quote what they see, retail OTC. I mean, you're hitting us in a coin top of the book at $3 wide.
Yeah.
No one's quoting that OTC.
But the thing that David doesn't see is that David sees his own flow, and being one of the main market makers on LMAX, I see David's flow as well, but I also see my flow. And I know that my flow overall is more geared towards OTC, more benign, more, less aggressive than what you see on LMAX. And it makes perfect sense, because an aggressive client, very smart, perfect algos, knows where the market is going. If he trades with me, I'm going to lose money. And so I'm going to widen the spreads, and if the spreads are too wide, they're going to go to LMAX. And vice versa. Someone's trading on LMAX, if they never move the market, they better come to me, because they're going to see tighter pricing overall. And so there's that sort of back and forth of clients that have better reasons to go in exchange or better reasons to trade OTC.
It's just a fact, when it was only a retail business, spreads were 1%, which cannot be an efficient capital market. It cannot be that way, right? So most LPs now are sort of making spreads of, call it 10 to 20 bips when things are moving north. I think if liquidity pool like ours, you're looking at, you can get as low as 1 basis point, which is still, in foreign exchange terms, is still huge. Right? I mean, huge. So it's going to only come down to tenths of basis points as time moves on. The reality is, look, there's lots of reasons for spreads staying wide. It's an expensive product to trade, right? There's a real credit risk that you don't have in other asset classes. So everything has to be priced in to that. So it's going to be wider than FX for a while. It's okay, Max. It's okay, Alex. You can still make some money for another year or two. But look, we're heading south. I mean, think about the poor old institutional exchange. I mean, my designated market makers, they make for 0. Thanks, Max, you can pay me later. And they aggress for 3 basis points. 3 basis points. If I run a retail exchange out there, I'm still charging 100. So, yeah, I guess I'm leading the path downwards. So
race to the bottom.
I just need to print more often, I guess.